Hello everyone and welcome back to my morning report analysis videos with me, Richard Perry, market analyst at Hantec Markets on Friday the 1st of December. We have a pretty dollar negative view of the markets today, and that's coming as tax reform has hit a little bit of a hurdle. I mean, it's not really to be unexpected, but we've seen the dollar just dropping away again, and that's come as Treasury yields have fallen back. They were up almost 2.44% on the 10-year yield yesterday, but yesterday the Republicans sort of delayed the tax reform vote in the Senate, and subsequently we're seeing a little bit of anti-dollar sentiment coming through today. Treasury yields lower, and subsequently pulling markets lower on the dollar, and also equity markets. Equities had been soaring higher on Wall Street, but after that, after the close, we saw the tax reform delay, and subsequently we're seeing European markets paying the penalty of that. So that's why we're seeing DAX, CAC and FTSE, well, predominantly DAX and CAC lower today. And the dollar is suffering, not massively, it has to be said, but still lower. Sterling's unwinding a little bit of the exuberance that it's seen in the last couple of days, but yeah, we are seeing a dollar generally a little bit weaker against all these forex majors, and also the gold price is up. So that's basically what we're seeing today. We've got the ISM manufacturing numbers today, and they've come out interestingly. Look at this, strong numbers again on the Eurozone. Certainly Germany anyway. German Eurozone. German numbers 62.5, 60.5 on the PMI. Wow. And the Eurozone as well, above 60. UK 58.2. Beating the estimates of 56.5. And that, I believe, is a 51-month high on that manufacturing PMI for the UK. So that was a strong number. But then into the afternoon, we've got the ISM data, and that is going to be key for markets today. 58.4, very marginally ticked lower from 58.7 last month, but that's likely to be a driver in the afternoon. But at the moment we're seeing dollar negativity, and a little bit of risk off as well, as the Senate continues to sort of see if it can pass tax reform, which is ultimately going to be key across markets. So my chart today is sterling Aussie. Now, we had sterling massively higher in recent days, breaking out on several markets, but look at this breakout on sterling Aussie, 76.50, but also the breakup above 77.95, so let's say 78 figure, and that's the highest since basically the market really started to pull lower. So basically the market's been in what you could argue to be a sort of a 2,000 pip range, or two big figure range, sort of 78 down to 58, broadly speaking, and sort of breaking out above that on the Aussie dollar. Sorry, on the against the Aussie. So that is a really key move that we'd seen yesterday, breaking out on a closing basis. It's now pulling back. 76.50 was the breakout level, and you've got sort of support band 76 to 76.50. And I think a little retracement towards that level, if it finds the support around that, would be a nice little buying opportunity, really, sort of unwinding to the breakout. You've got this uptrend, this sharper uptrend that comes in today around sort of 73, 73.80, 74 figure. Again, that's a near-term sort of breakout support. So you've got a pretty decent opportunity if you do see a corrective move on sterling Aussie in the next couple of days. If you start to see the market finding support again, that could well be the catalyst for another move to the upside. And certainly I think anything positive on Brexit will help to drive that market higher, and I think that would be likely to be how we're going to play this one. You've seen a bit of an unwind on the hourly chart today. You're into now sort of support areas from yesterday. That little pivot of 77.50 holding, again sort of 77 figure areas, a bit of a basis of support, and then 76.50. So you seem to work in sort of 50 pip increments, don't you, on the Aussie on the near term basis, and then back at sort of 76 area. So you've got some nice levels actually to work with there. But as this market just unwinds into support, you could start to see a bit of a floor once more, and any unwinding moves are a chance to buy, I think. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.